Good afternoon, ladies and gentlemen. My name is Russell Higgins and I'm the Chairman of Argo Global Listed Infrastructure. And I'm here to welcome you today to the 7th Annual General Meeting of the company. Throughout the day I'll refer to Argo Global Listed Infrastructure Limited as Argo Infrastructure, or ALI for short. And welcome today. It's great to see you all in person for the first time in 3 years. Big interruption from the COVID pandemic, but thankfully life is moving on. And for those of you who've not been before, very welcome to the meeting of the company. Before we begin the formalities, I'd like to inform you that the meeting is being filmed and streamed live on the company's website. That's to provide a facility for those who are unable to attend here today in Adelaide. A recording of the meeting will also be available on our website later today. Can I please ask at this stage that you all check that your mobile phones are turned to silent? That includes the chairman. Yes, thank you. I have been informed by the Company Secretary that the meeting has been convened in accordance with the Corporations Act and the Company Constitution. A quorum is present and therefore I declare the meeting open. A disclaimer is displayed before you here today, and it's important to understand that the information presented today is of a general information only and not a securities recommendation or a statement of opinion intended to influence any person in making an investment decision. You should consider seeking professional advice before making any investment decision. At this stage, I'm pleased to welcome my fellow non-executive directors, our Managing Director and Company Secretary, who will now introduce themselves.
Good afternoon. My name is Mark Hall. I was appointed to the board as an independent non-executive director in 2019, and I'm chair of the Audit and Risk Committee. Thank you.
Good afternoon. My name's Fiona Hill. I was appointed to the board in July of this year as an independent non-executive director, and I'm a member of the Audit and Risk Committee. I'm actually up for election today, so you'll be hearing from me a bit later on. Thank you.
Good afternoon. I'm Joycelyn Morton, as many of you know. I was appointed to the board on incorporation in 2015 as a non-independent, non-executive director. That's of course because I was already a director of Argo and until June of this year. I'm a member of the Audit and Risk Committee and I'm standing for re-election today, so I'll be addressing the meeting later on today. Thank you.
Thank you. Good afternoon, everyone. My name's Jason Beddow. I'm the Managing Director of Argo Infrastructure, also the Managing Director of Argo Investments, and I've been with the company since it listed back in 2015, or been the Managing Director since then. Thanks for coming.
Good afternoon. My name's Tim Binks. I'm the Company Secretary of Argo Infrastructure, also joining on incorporation in 2015. I also work for Argo, where I'm the Chief Operating Officer.
I'd also like to take this opportunity to introduce you to Ben Morton, the Senior Portfolio Manager from Cohen & Steers, who manage Argo Infrastructure's portfolio. Cohen & Steers manage over $100 billion in assets for a range of clients around the world and were pioneers in the development of global listed infrastructure assets. Given the time difference from New York and still COVID considerations, Ben has recorded some commentary regarding the global infrastructure portfolio and will speak to us later in the meeting. I now need to just run you through the meeting procedures. All resolutions at this AGM will be decided by poll. As chairman, I have called that poll. When registering your attendance, you will have received either a blue, orange or white admission card. Shareholders or proxy holders representing shareholders were issued with blue admission cards and are entitled to vote on the poll and ask questions at the meeting. On the reverse side of your blue admission card is your voting paper and instructions. Only those shareholders with blue cards have received a voting paper. This can be marked at the time we consider each resolution or at any other stage during the meeting. After the meeting, you can place your completed voting cards in one of the ballot boxes located by the exit doors. The results of the poll will be released in an announcement to the ASX later today. The holders of orange cards are non-voting shareholders, such as a joint holder when the other joint holder holds the blue voting card. These card holders do not vote by poll, but are entitled to ask questions at the meeting. All visitors are issued with white cards and not entitled to vote or ask questions at the meeting. Nevertheless, you are extremely welcome. I report that the minutes of last year's annual general meeting were confirmed as a correct record at the subsequent meeting of directors. The notice of meeting for today's AGM has been circulated to shareholders and I propose to take it as read. I will now move to the first item of business. The first item on the agenda concerns the consideration of annual financial statements and reports. The audited financial statements of the company and the reports of the directors and the auditor for the year ended 30 June 2022 have been published and made available to shareholders. In the course of receiving and considering the financial reports, I will now make some general comments about the year under review. This will be followed by a brief address from our Managing Director, Jason Beddow, and the Portfolio Manager's commentary from Ben Morton of Cohen & Steers. During the past year, global listed infrastructure has again proved resilient amid turbulent global market conditions. Volatility, driven by various macroeconomic challenges and geopolitical risks, has focused investor attention on the inherent characteristics of infrastructure stocks, including their reliable income streams and pricing mechanisms which are often inflation-linked. The asset class delivered a positive return for the 2022 financial year, gaining 12.3% in Australian dollar terms, decisively outperforming broader global and local equities, which retreated over the period. Argo Infrastructure's portfolio performed even better, returning 13.2% for the financial year, well ahead of Australian shares, which fell 6.5%. To further demonstrate the diversification benefits of our portfolio of global listed infrastructure companies. As the portfolio is unhedged for currency, the depreciation of the Australian dollar, which declined from 75 US cents to 69 cents over the year, bolstered performance. In the wake of Russia's invasion of Ukraine and the ensuing energy supply issues, the strongest performing subsector within the portfolio was midstream energy, which consists of pipelines and storage assets. The gas distribution subsector was also impacted by the war in Europe, with worldwide demand for natural gas driving investor interest in companies that own gas distribution assets, including Sempra Energy, one of our top 10 holdings. Argo Infrastructure reported a profit for the financial year of $29.9 million, an increase of 59.9%, largely due to the strong performance of the investment portfolio, coupled with positive currency effects. It is important to remember that the company's reported profit can fluctuate from year to year as investment income includes unrealised gains or losses, as the case may be, in the portfolio's value from one period to the next, as required by the accounting standards. Argo Infrastructure continues to be in a strong financial position with approximately $400 million of assets and no debt. In August, the board was pleased to declare a franked final dividend of 4.5 cents per share. The final dividend marks our 9th consecutive fully franked dividend, and together with the interim dividend of 3.5 cents per share, meant that shareholders received a fully franked annual dividend of 8 cents per share. Argo Infrastructure has now paid out 40.25 cents per share in dividends, reflecting our continuing commitment and track record of delivering sustainable total shareholder returns. This also demonstrates a significant benefit of investing in international assets via Argo Infrastructure's listed investment company structure, and that is our ability to generate franking credits because we pay tax in Australia. This is a unique advantage not offered by other managed investments that are invested in offshore assets, such as trusts, or by investing overseas directly. We offered our third share purchase plan to shareholders earlier this month. The SPP again proved popular with many of our smaller retail shareholders, providing them with an opportunity to increase their holding by up to $30,000 without paying any brokerage. The SPP raised $21 million, with 1,800 or 19% of our shareholders participating. Due to the large and highly liquid nature of the global infrastructure universe, the funds raised can be deployed almost immediately. We will continue to take a careful and disciplined approach to Argo Infrastructure's capital management. We have raised additional capital via an SPP for 3 years in a row, and we would like to continue to grow the size of the company. However, this has only been possible as we've judged market conditions to be suitable, and the Argo Infrastructure share price has been trading close to NTA. We would not consider undertaking capital raisings if our shares were trading at a large discount to NTA. Pleasingly, Argo Infrastructure's performance track record has again been recognised by independent research houses Lonsec and Independent Investment Research, or IIR. Following an in-depth review, Lonsec recently reaffirmed its recommended rating of the company, which is its second highest rating. Similarly, IIR maintains a recommended rating for Argo Infrastructure. You can find the latest research reports. You can find the latest independent research reports on our website under the News and Insights section. I now turn to the issue of environmental, social and governance. Investor focus on environmental, social and corporate governance, or ESG factors, continues to increase, including in the global listed infrastructure space. Argo Infrastructure's portfolio manager, Cohen & Steers, is acutely aware that ESG factors can present both risks and opportunities which can influence a company's long-term financial sustainability. As you will hear shortly from Ben Morton at Cohen & Steers, the assessment of ESG factors is embedded in their analysis of companies. The importance placed on this aspect of their investment approach is reflected in their appointment of a dedicated head of ESG. In addition, Cohen & Steers has established an ESG investment committee and within the infrastructure team specifically, assigned the role of captain of ESG to one of their senior portfolio managers. I now want to speak about the share price relative to the net tangible asset backing. For some months now, Argo Infrastructure's share price has consistently traded at or above its per share net tangible asset backing. This is particularly pleasing, given that LICs offering exposure to global assets often trade at generous discounts to their NTA, and on average at a greater discount than their counterparts offering exposure to Australian assets. The improvement in the performance of our share price relative to our NTA can be attributed to a combination of factors, including strong performance of the asset class, our established dividend track record, and the range of communication and marketing initiatives we undertake. On 30 June 2022, Mrs. Andrea Slattery, who's with us today, welcome Andrea, retired from the board after 7 years of dedicated and diligent service. As a founding independent non-executive director, Andrea played an integral part in the establishment and development of the company, including the IPO process, which was at the time the largest listed investment company to be floated on the ASX. On behalf of the board, I'd like to take this opportunity to formally thank Andrea for her contribution to Argo Infrastructure. Following a search process, Ms. Fiona Hill was appointed as an independent non-executive director with effect from 1 July 2022. I'm pleased to introduce Fiona to shareholders today. She has more than 25 years' experience advising public and private organisations, including on strategy, growth and risk management. Her company director roles include relevant experience in the infrastructure sector, and we will hear more from Fiona later in the meeting. Now to the outlook. During the recent market turbulence, Argo Infrastructure again proved less volatile than the broader Australian share market. This low correlation to local shares demonstrates one of the company's diversification benefits. The global economy is grappling with a range of geopolitical and macroeconomic challenges which are weighing on sentiment. The outlook continues to be heavily reliant on how governments and central bankers navigate these challenges, including unwinding extraordinary stimulus measures and monetary policy settings. Beyond these current challenges, the outlook for global listed infrastructure is positive, with continuing investment in the development of major infrastructure projects worldwide, particularly renewable power generation. Other secular trends, such as the digitisation of the economy, will drive the demand for infrastructure needed to facilitate this process. In addition, significant private investor appetite for infrastructure exposure is supporting valuation for both listed and unlisted assets. I'd like to conclude by thanking our Managing Director, Jason Beddow, and his team for all their hard work during this last year, which has included plenty of challenges if you think back to where we were with the COVID pandemic and other issues 12 months ago. In fact, 12 months ago I was sitting in my home talking to you. It's good to be here today. I'd also like to thank Argo Infrastructure's portfolio manager, Ben Morton, and the team at Cohen & Steers in their offices around the world. Thank you to my fellow board members for your continued commitment and valuable contributions to the company. And most importantly, to our loyal shareholders and to all our new shareholders, a warm welcome to Argo Infrastructure. I now call on Jason to deliver his Managing Director's address. Thank you.
Afternoon, everyone. Just reiterate what the chairman said. It's nice to be out seeing people face to face, so we appreciate your attendance. When I addressed the AGM this time last year, several ASX-listed infrastructure companies were subject to takeover bids. The most high-profile of these was the offer to acquire Sydney Airport. Now, this bid was ultimately successful, and Sydney Airport was delisted earlier this year. The takeover of several other ASX-listed infrastructure companies in the last 12 months, such as Spark Infrastructure and AusNet Services, leaves just a handful of domestic infrastructure stocks to invest in. Those that remain represent just a few types of infrastructure assets. Globally, institutional investors continue to increase their allocations to infrastructure investments. However, with limited infrastructure investment options, these investors have sought access to the underlying assets of listed infrastructure companies by purchasing the entire company and taking it private. Many of these acquirers have shown they are prepared to pay handsomely for these businesses. The $23.6 billion takeover of Sydney Airport by a consortium of private investors illustrates this trend. Sydney Airport was sold to a conglomerate of private institutional investors at a premium of over 50% to its market price at the time of the first bid in July 2021. And looking ahead, we expect there will continue to be a strong appetite for infrastructure assets, which will further support infrastructure valuations in both the listed and unlisted space. Excuse me. When we started Argo Infrastructure a little over 7 years ago, there were more than 15 Australian infrastructure stocks. Now, with so few remaining, looking offshore to get exposure to the asset class has never been more compelling or necessary in our view. Outside of Australia, there are hundreds of infrastructure stocks with a combined market capitalisation much larger than the entire Australian share market. These companies give access to a range of infrastructure asset types and span numerous geographies across developed and emerging economies. Argo Infrastructure gives investors access to this large and diversified asset class through a single ASX trade. I'm really pleased with how the company has matured since its IPO in 2015. Argo Infrastructure has continued to grow and has provided the diversification and subsequent returns to shareholders that we believed it would when it was established. Our shareholders continue to benefit from both a specialist global infrastructure manager in Cohen & Steers and a trusted local manager with expertise in listed investment company management in Argo. You will shortly hear from Ben Morton, Head of Global Infrastructure at Cohen & Steers. He will discuss current infrastructure and investment trends, such as the impact of inflation and rising rates, as well as specific stocks and the opportunities in the asset class. Before I hand over to Ben, I'd like to acknowledge the efforts of the whole Argo team who contribute to ALI. I'd also like to acknowledge the contribution from the chairman and non-executive directors, and I look forward to working with them in the year ahead. And I'd also like to personally thank Andrea for her contribution during her time on the board. And I wish you all well, our shareholders. Thank you for your continued support, and I look forward to meeting more of you as we move into 2023. So thank you for coming.
We're the sub-advisor on the Argo Global Listed Infrastructure Fund. I'm really excited to be here today to talk about listed infrastructure with everyone. Listed infrastructure has performed quite well in the context of broader market volatility that we've seen this year. So as of September 30th, and this is in US dollar terms, infrastructure is down around 12 to 13%, which is again a period in which equities have been down around 25% globally and fixed income down around 19 or 20%. So clearly infrastructure doing what one would expect it to do as an asset class that's focused on more defensive businesses. These are businesses that provide essential public services. And again, we've talked about those downside protection characteristics given the predictability and the relative predictability of cash flows for these businesses. If you take a step back and think about the various subsectors of infrastructure, we've seen quite a bit of dispersion this year in terms of performance. So midstream, which is a subsector with the highest, I'd say, inflation beta, has performed the best. Some of the more defensive subsectors, the utility subsectors, have performed the second best. Then you move down more towards the economically sensitive subsectors like freight rails and marine ports. And then lastly, the worst performing subset within infrastructure has been some of the higher growth, higher multiple businesses. For example, water utilities in the US, which tend to be high growth, high multiple, as well as most notably telecom infrastructure, whether it's towers or data centers that have been hit disproportionately given their high growth, high multiple starting point. Lots of interesting developments in the asset class recently, many of which relate to sort of energy dynamics around the world. And you think about the implications of higher for longer energy commodity prices on many parts of what we invest in our universe. You can think about benefits to businesses in the midstream space, many of which do better amid this higher for longer energy commodity price environment, because those businesses tend to benefit when production rises, because that means higher throughput on energy infrastructure assets. You also have the distinct but related impact on things like LNG exports. And we invest in companies like Cheniere Energy that export LNG from the US to other parts of the world. Clearly there's been a big shift amplified by the Russia-Ukraine war towards energy security of supply, and being a set of companies in the midstream space that are domiciled in a country or countries, meaning the US and Canada, that are self-sufficient from an energy standpoint and a source of growth for sort of global energy production is a favorable place to be relative to some of these other regions. On the flip side, you also have sort of some of the negative implications of higher energy commodity prices. That tends to impact utilities, right? Where in some parts of the world, customer bills have gotten so high that it's making for very tough sort of political dynamics as utilities attempt to pass through these costs to customers. So again, it's our job to understand and price these risks and opportunities. And in Investor, we see the best opportunities at any given point in time. So that's probably the biggest theme that sort of resonates throughout the asset class over the last 3 to 6 months, is the varied impact of the sort of energy dynamics globally and what they're doing across the infrastructure universe. We've talked about another theme that sort of has been around for some time in this asset class, and that is dry powder and the tremendous amount of capital that's been raised by private infrastructure vehicles to invest in infrastructure assets. Increasingly over the past several years, really I'd say in an enhanced way over the past 12 to 18 months, we've seen more and more of our listed companies impacted by that private capital. So what do I mean by that? Our companies and our management teams have been increasingly willing to sell assets, sell stakes in assets that they own, or even sell themselves to these either sovereign funds or private infrastructure vehicles. Several could be highlighted, but notably, Sydney Airport in Australia was one of the larger transactions that we've seen, but a handful of companies have sold themselves altogether. This has really been a global trend. Clearly, there's been an emphasis in Australia because we've seen 3 transactions in the last 18 months of companies effectively in the infrastructure universe going away by virtue of private investment. But this is something that we're seeing globally. But at the same time, I wouldn't say that it's one direction only, because we are seeing capital formation with IPOs of infrastructure companies in several parts of the world. So I expect to continue to see both trends over time. And clearly, one that is very impactful on our universe is this privatization theme. So the topic du jour continues to be rising interest rates, above trend inflation, And what's the impact of those dynamics on infrastructure? You know, first, and I think you have to think about these distinctly. So first, in terms of higher rates, clearly this is an asset class that is capital intensive, carries a fair amount of leverage by virtue of you know, the types of businesses that they operate, and the predictability of cash flows can support that leverage. So, you know, historically, given that higher leverage profile, in extreme moves in interest rates, infrastructure often underperforms as sort of a knee-jerk reaction, but then tends to outperform going forward following that initial knee-jerk underperformance. Why is that? It's because a couple things. One, historically the market's probably overcorrected relative to that initial extreme rate move. And then two, you know, when rates move, that may be accompanied by either strong economic conditions, which can support some parts of infrastructure, or it can be accompanied by a time of very weak economic conditions where more defensive business profiles shine through. And I think we've seen some of that dynamic occur this year. Folks have been more thoughtful and more wary of the slowing economic growth than they have of the rise in interest rates, and clearly infrastructure defends well in a slowing growth environment. If we think about inflation, you know, infrastructure tends to perform well in periods of unexpected inflation, when inflation's higher than the market expects. Clearly that's an environment that we're in today. Why is that? It's because infrastructure businesses tend to have pricing dynamics whereby the prices they charge tend to be linked to inflation. Toll roads, for example, have, let's say on average, 50-year concession agreements with local governments whereby they're allowed to raise tolls every year at a rate linked to inflation. So a very direct linkage that allows these companies to pass along a lot of these higher costs to their customers or the users of the assets. So typically an asset class that performs well across higher than expected inflation, even periods of above trend inflation, when inflation starts to fall, infrastructure tends to perform well relative to its own long-term average. So we spend a lot of time focused on ESG and integrating our views on ESG as it relates to our companies into the bottom-up work that we're doing. So infrastructure is a bit of a unique asset class when it comes to ESG integration, in that a number of the factors, particularly on the environmental side and on the social side, are factors that we have been integrating for as long as we've been investing in these companies. Why is that? It's because these factors are core to the operations of their business. So if you take, for example, utilities, many utilities are in varying stages of energy transition, meaning they're retiring their coal-fired power plants and transitioning to new sources of generation. So building new wind or solar facilities. We have to embed costs of retiring coal plants, costs and investment needed to spend on new generation, what is the regulatory treatment of that, et cetera. So we've been very focused on, in particular, energy transition risks and opportunities as we think about integrating environmental factors into our financial outlooks for these companies. From a social perspective, these businesses, again, are providing essential public services. They tend to be largely regulated. Service quality is paramount, right? You want to be delivering a good service to your customers, and if you're not, regulators will hurt you. They will allow lesser rates of return over time if you're not up to snuff as it relates to service quality. So we track service quality metrics. Many of our businesses have unionized workforces, so we have to think about labor costs over time. So a number of different factors on the environmental and social side that are often and comprehensively integrated into our bottom-up work on these companies. On the governance side, again, we've been very focused on governance as a public company ourselves. You know, we appreciate the discipline of public market standards. We have our analysts vote proxies, which I think is a bit unique. You know, we think they should be sort of operating on the front lines as it relates to the issues that companies are facing as it relates to proxies. We also view governance as sort of the most important of the pillars as we think about ES&G, because frankly, environmental and social issues are governed at the management level from each company. So we expect to see great boards, great management teams, and discipline as it relates to these other factors, and being proactive from the standpoint of focusing on environmental and social issues. So governance is really the starting point for us as we think about how it all trickles down into our integration process. So I noted earlier that one bright spot within infrastructure has been midstream, and I expect that to continue to be a bright spot within the asset class. Again, North America is a source of supply for the rest of the world as it relates to energy, particularly natural gas, which we believe will continue to be increasingly adopted as a transition fuel. We've seen the EU come out and include natural gas as a transition fuel as part of their green plan. So I think, companies in our universe that can benefit from rising production of energy in North America by virtue of their ownership of the pipelines that transport that energy or store that energy are of interest to us. Additionally, again, a company like Cheniere that exports energy from North America to parts of the world that are frankly short energy is in a very strong position today, largely by virtue of their ability to sign long-term contracts to drive more investment here in LNG export capacity. So that's one space that we like. We're also excited about renewables and the transition to renewables. So you'll know that one of the large positions in our portfolio is NextEra Energy, which is the leading owner and operator of both wind and solar in the Americas. Continue to think that climate change will continue to have an impact on investment in energy, and we think about what that's meant for, again, retirement of old fossil fuel plants and investment in renewables. So we continue to see companies like NextEra invest a lot, only supported further by the Inflation Reduction Act here in the US. But this is really a global theme. We're seeing governments around the world that are very supportive of renewable investments and providing economic incentives and political incentives to make that investment. It's not just about the generation, though. I'd highlight that generation is one piece of the pie, but transmission investment's a large one also, as we need to invest in the power lines that will connect these new sources of generation to consuming regions, right? So these high-speed transmission lines will be crucial to moving energy from places where the sun shines and the wind blows to city centers, for example.
Well, thanks very much, Ben, and Jason, also thank you very much for your remarks earlier. Mr. Rohit Khanna, who's the signing audit partner from the company's external auditor, EY, is present here today at the meeting and is available to answer any questions you may have relevant to the conduct of the audit and the preparation and content of the auditor's report for the year ended 30 June 2022. Shortly, I'll address any shareholder questions on the financial reports and any general matters, bearing in mind that we'll separately consider the remuneration report and other items of AGM business later in the meeting, and there will be opportunities to ask questions in relation to those items at that time. To ask a question, please have your blue or orange card and make your way to one of the microphones that are located towards the front of the aisles. Also, I ask you to state your name and any affiliation and limit yourself to one question in consideration to other shareholders. Are there any general questions or comments about the company or its financial report at this time? If not, I haven't had any questions sent in advance on this occasion either. So thank you very much. We'll move to the next item of business. The next item of business concerns the adoption of the remuneration report. The Corporations Act requires all listed companies to submit a remuneration report to their shareholders for consideration and adoption by way of a non-binding resolution. Oh, sorry, you want to go back to the previous item? Yes. Okay.
Firstly, I'd like to congratulate Cohen Steers. They've done a credible job, and to the team here too. It shows you the value of being in LICs that look at things a bit on a different scale, and you've done very well, and I'm very happy with the outcome so far. My question is, I understand that, like everything, things go in fits and starts if you're in cycles, and especially with infrastructure, like you've got energy is, high on a lot of government's list. Does what you put in, and we're talking about percentage terms here, what you put into energy as compared to another asset like communications, does that vary a bit? Does it go up and down? Because, percentage-wise, if something's the flavour of the month, do you put more into the flavour of the month and take money out of other areas that are don't look so, well blessed at the time?
Yes, thank you. Indeed, the weightings in the portfolio vary a bit through time, both as to the sectors and the geographical weighting, and we provide lots of information about that on our website. You can see periodically the reports from Cohen and Steers that will go into the question of those weightings. But yeah, the answer is yes, but it's not so much about things that are the flavour of the month, but rather assessment of medium and long-term value, which leads to the question of where they invest. All right, sorry, well, we've got another one. Yes?
Yeah, Stuart Brew, investor in infrastructure. I probably missed this, but I just wondered if you could repeat what the percentage of costs are compared to revenue?
Yes. In the
administration costs.
Yeah, yes. In the case of Argo listed infrastructure, the company is run under a contract with Argo Service Company, which is owned by Argo Investments, and the company pays a fee of 1.2% of assets under management up to 500 million value, and then between 500 million and $1 billion it drops to 1.1%, and should we ever grow to over $1 billion, which I hope we will one day, drops to 1%. And of that fee, half of that goes to Cohen and Steers to manage the portfolio, and half of it goes to Argo Service Company to provide all the executives and run the company and the ASX listing arrangements, the shareholding, custodian fees and all of that for running the company. So yes, the fee is 1.2%.
I'm back again. I want to ask a question about the share purchase plan. The money that's the 21 million or so that was raised with that, is that basically sitting in account at the moment, or most of it sitting in account getting interest, or has it been redirected? In other words, is it still to be utilised?
Well, given that it was only just the shares issued last Friday, Tim, you tell us, I mean, the plan is to invest the money as soon as possible. So Tim or Andrew, can you tell me what's happened between Friday and today?
I'm not aware that it's been invested over the weekend, but that'd probably be cleared today, I would have thought. So Cohen and Steers, they know it's coming, and as Russell mentioned in his speech, it's pretty easily deployed. They could do that in about half an hour if they wanted to, I'd say. So, imminently.
Yes, looks like we have another question.
Thank you. David Hansman's my name. With respect to Australian infrastructure companies, and I have in mind APA in particular, which group makes the decision? Does Ali make the decision, or does it do it in consultation with Cohen and Steers, please?
Yes. Thank you. APA Group, a company close to my heart. I was on the board for 15 years. So Cohen and Steers is the portfolio manager for all the portfolio here, and they make the decision about where to invest. To my memory, they don't hold any APA at the moment. They have in the past, but they don't at the moment. And there's a relatively small proportion of the portfolio invested in Australia because, has been noted here and elsewhere, the opportunities in Australia have been diminishing, with the latest one, Sydney Airport, taken out, and Argo Infrastructure and so forth. So there's less and less opportunities. The portfolio that Cohen and Steers run for us does include Transurban currently, but I think that's the only Australian asset. Is that right, Jason? Atlas Arteria. Oh, they hold a small holding in Atlas Arteria as well. So, but no APA, but they have in the past. Their decision. They're the portfolio manager. If there are no other questions, I'll resume on item 2, the remuneration report. So the Argo Infrastructure's remuneration report is detailed within the annual report. The remuneration report is relatively short, outlining the company's remuneration of each non-executive director. As the company is externally managed, the managing director and all the other executive personnel are not paid by ALI but are remunerated by the manager, Argo Service Company Limited, as part of their roles with Argo. And as I explained before, we pay the fee 1.2%, half of which goes to Argo Service Company Limited and half of which goes to Cohen and Steers. So the only 4 employees of the company are the 3 other directors sitting here on the stage and myself. The 4 of us receive a fixed base fee, do not receive additional fees for participating in board committees, and not entitled to any other remuneration other than legislated superannuation requirements. I now move the motion that the remuneration report for the year ended 30 June 2022 be adopted. Can I ask that any shareholders who wish to ask a question regarding the remuneration report specifically make their way to one of the microphones? For your information, details of the proxy votes received on this resolution appear on the screen. Please note that this resolution is advisory only and does not bind the directors of the company. However, should 25% or more of shareholders vote against the remuneration report for 2 years in a row, then shareholders at the second AGM will be asked to vote on whether all directors should stand for re-election. Are there any questions on the report? If not, I now put the resolution to the meeting and remind you that we are voting by poll. If applicable, please mark your blue voting card for agenda item number 2. We'll now move to the next item of business. Item 3 on the agenda concerns the re-election of a director. Joycelyn Morton retires by rotation in accordance with the company's constitution and, being eligible, offers herself for re-election today. The details of Joycelyn's qualifications and experience are included in the notice of meeting. Other directors unanimously recommend that shareholders vote in favour of Joycelyn's re-election, as they consider she's well qualified to be a director of the company. I now invite Joycelyn to address the meeting.
Thank you, Russell, and good afternoon to everybody. It was lovely to see everybody in the foyer and to be able to chat again after some time away. I was very pleased to join the ALI board in March 2015, and I advise shareholders that this is a company with strong corporate governance and a board that, although small in size, is very strong and clear in its focus on good business ethics and value adding for all shareholders. The early days were difficult for ALI. However, we knew that the portfolio could provide shareholders diversification benefits through long-term international infrastructure investment, and that has proven to be the case. It's a pleasure and an honour to be a director of this company, and after a few far from normal years, it's a delight to be back in Adelaide for the AGM and to see you in person. All directors should assess the value and skills that they bring to a board. The notice of meeting summarises my 42 years of experience, background and credentials, firstly as a senior executive with Woolworths Limited, Shell Australia, Shell International in business, finance and taxation. Then for the last 15 years, I've served as a non-executive director of various companies, and of particular note from an infrastructure point of view, Snowy Hydro in the Snowy Mountains, then here in Adelaide, ASC, which builds the ships and also does the sustainment of the maintenance, repairing and the upgrading of the Collins-class submarines, and then previously Beach Energy. So I have knowledge of and passion for infrastructure. In addition to this business experience, I also have given extensive community service in a volunteer capacity to the accountancy profession, both domestic and international. Although a chartered accountant by qualifications, I have served for over 30 years in different capacities for CPA Australia, including being the first female president of their New South Wales division and ultimately the national president in 2000. I've also served on many industry, university and government committees, councils and not-for-profits, and I'm currently the chair of the Greater Sydney Region Red Shield Door Knock Appeal for the Salvation Army. This is a time of significant structural and financial change in the business community, so it's important that your directors have a broad range of experiences to assist the company. I apply these 42 years of business and professional experiences covering public accountancy practice, financial services, major infrastructure companies in retail, oil, gas, shipbuilding, hydroelectricity, both here in Australia and internationally, including 15 years of ASX-listed non-executive directorships and chair experience for the benefit of our company and our shareholders. I view it as a privilege to be a director of ALI. I thank my fellow board members for supporting my re-election, and I thank all shareholders for your support as well. Thank you.
Well, thank you very much, Joycelyn. I now move the motion that Joycelyn Cheryl Morton be re-elected as a director of the company. Can I ask that any shareholder who wishes to ask a question in regard to this resolution, please make your way to the microphone. For your information, the details of the proxy votes received on this resolution appear on the screen. A simple majority of greater than 50% in favour is required to pass this resolution. Are there any questions regarding Joycelyn's re-election? If not, I now put the resolution to the meeting. If applicable, please mark your blue voting card for item number 3. Thank you. We'll now move to the next item on the agenda. Item 4 of the agenda concerns the election of Ms Fiona Heel. Fiona was appointed to the board in July this year as an independent non-executive director, following a search process which identified her extensive executive and company director experience, which provided a skill set that's ideally suited to the board. In accordance with the company's constitution and being eligible, Fiona offers herself for election by shareholders today. The details of Fiona's qualifications and experience are included in the notice of meeting. The other directors unanimously recommend that shareholders vote in favour of Fiona's election, as they consider she's well qualified to be a director of the company. I now invite Fiona to address the meeting.
Thank you, Russell. Good afternoon, ladies and gentlemen. I'm honoured to be put forward today for election to the board of Argo Global Listed Infrastructure. As a South Australian, I have a deep understanding and respect for Argo Investments and the wealth creation vehicle it has provided many Australians. To see Argo extend its reach beyond Australia through this company's global infrastructure portfolio provides for great opportunity and diversity in shareholders' investments. As a chartered accountant and non-executive director across industries including tourism, transport, utilities and infrastructure in both listed and unlisted environments, I believe I bring the skills and experience to continually challenge decision-making and contribute to maintaining strong governance around the board table. I'm an experienced board audit and risk chair, and I'm also chair of sustainability on several boards where we focus on the ongoing responsibilities and reporting obligations around ESG. My current board roles include the ASX 200 listed company Kelsian. I think many of you would probably know that as previously was Sealink, of which I'm deputy chair. I sit on several government boards, including the South Australian Water Corporation and Adelaide Venue Management Corporation, of which this building itself is part of that organisation. I'm an independent director of Celsius, which is a public-private partnership comprised of a group of global infrastructure companies that oversaw the design, build and now facility management of the $3 billion Royal Adelaide Hospital. Past directorships include the South Australian Tourism Commission, the Adelaide Fringe Festival and Prime Q. My executive career as a chartered accountant and business consultant gave me the opportunity to work both nationally and internationally, working with organisations on business and finance strategy, mergers and acquisitions, and risk management across a diverse range of industries. I hold a Bachelor of Commerce. I'm a Fellow of the Chartered Accountants of Australia and New Zealand and a Fellow of the Australian Institute of Company Directors. With the experience I've gained over my career, I'm confident that my extensive corporate, financial and governance experience, along with the knowledge of the duties as a listed board director, enables me to contribute to the Argo Infrastructure Board on behalf of all of my fellow shareholders. I welcome the opportunity to serve this organisation with such a highly skilled board and management team as it continues to provide capital and income growth for its investors. Thank you for your consideration.
Well, thank you very much, Fiona. I now move the motion that Fiona Adrienne Heel be elected as a director of the company. Can I ask that any shareholder who wishes to ask a question regarding this resolution, please make your way to the microphone. For your information, details of the proxy votes received on this resolution appear on the screen. A simple majority of greater than 50% in favour is required to pass this resolution. Are there any questions regarding Fiona's election? If not, I now put the resolution to the meeting. If applicable, please mark your blue voting card for item number 4. So that concludes the business of the meeting. The poll will remain open for a short time after the meeting to allow you to submit your votes as you leave. We will announce the results of the poll to the ASX later today. If there's anybody who requires assistance with filling in the voting papers, please ask one of the representatives of Argo Infrastructure or Boardroom. I now declare this 7th Annual General Meeting closed.